Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, let's take a look again on the euro currency. Well, in general, there are no much action across the board, so any currencies now do not show any really fascinating trading action. So not much to discuss for today. One thing that I would like to say is that the stop grabber pattern that we have discussed on the Australian dollar on Friday still valid, and you can see market is jumping up. The extreme point of this stop grabber has survived, so market hasn't created the new low. It hasn't vanished this pattern, so let's take a look again. That's Australian dollar, that's our pattern. As you can see, all recent action stands above the extreme point, so theoretically this pattern is still valid. That is what about the Australian dollar. But today we will take a look at the euro currency again. The major thought that we have said in our weekly research is that in general on the higher time frames chart the price action looks mostly bullish rather than bearish. At least the mood of the recent action mostly bullish. But on the short time frame chart we see that really tight consolidation in tight range, since market was tight on the previous week. That's why you can see that pivot point stands very close to the recent price action. Trend holds bullish, market not at overbought. Our nearest target to the upside stands right here. It's approximately 138.40 area. There's 618 extension from that A, B, C bottom pattern. This target stands below the daily overbought, and that's why it really could be reached by the market. But yesterday you can see market has formed again another inside session. So you can see in fact 1, 2, 3, 4, 5th day in a row market stands inside of the range of this candle, with the first candle in this consolidation. All recent action stands tight. So we could say that market now is building an energy, and we should expect for a development either to the upside or to the downside. Recent action, as I said, was also not very impressive, so that's just a high wave pattern that in fact doesn't show the direction but tells us that market stands indecision. But based on the price action that has been formed here, so take a look at the 4-hour time frame chart, it's logical to expect some retracement, because market has completed this A, B, C bottom pattern right here. It was pretty harmonic pattern. Now market is calling around, and there are two possible scenarios that we could get. Recall that we discussed in the weekly research this possible A, B, C top pattern D development right to the confluence support areas 136.45, 136.60 area approximately. But also we've got here some bearish stop grabbers, but these stop grabbers haven't worked, so market has erased them by this move up. Now market is forming another pattern, so here we get stop grabber to the upside that theoretically suggests taking out of these highs. Also maybe market will give us another stop grabber here. In general you can see that market is calling around the weekly pivot point. It tells that market can't choose can't choose direction yet. And there are two possible scenarios here that is very probable. The first scenario is potential the butterfly to the upside, so you can see the butterfly is still possible. So you can see left wing of the butterfly, that could be right wing, especially taking in consideration this stop grabber, or that market could show some kind of could call it double top or something of that sort. So consider first top, second, and deep retracement to the downside. And in this case we will keep an eye mostly on this confluence support as the potential point for long entry. At least we will watch for the patterns around this area. Maybe we will get something on the hourly time frame chart. Both of these scenarios has the reason. Speaking about the double top pattern, the retracement seems absolutely logical, because market just has completed this ABCD pattern and hasn't shown yet any respect of this target. So that's absolutely normal. When the market shows the retracement right back down as the reaction on the completion point of the ABCD, and theoretically it treats normal if market even reaches the 618 support of the whole ABCD action to the upside. This treats as a normal retracement. That is acceptable. Sometimes this retracement could be shallower, but it should not be deeper than this level. But I suspect that hardly market will continue right to this area. I prefer to see, and probably if any retracement will start, we should watch for confluence support area as the potential area where retracement could be over. Right now, when the market doesn't show any respect of this ABCD pattern yet, personally, guys, I do not want to take the long position very much. I prefer to see the dip to buy if I would like to take the position in the upper direction, but I do not want to buy right at the completion point of ABCD target. Well, if you would like to trade the butterfly to the upside, the potential butterfly, well, in this case you need to take the position as closer to this low as possible, because that is an invalidation point of this potential butterfly, if it will appear at all, of course. Guys, personally, I hardly will be trade this butterfly. So probably I will mostly be focused on the potential deeper retracement for taking the long position. Because from the technical point of view, the chances, the probability of the deeper retracement seems greater than the just upward continuation here. Because also, as you can see at the daily time frame chart, that's in fact the first swing up, reversal swing after the long-term downward action. That's why the deeper retracement now seems more probable. Some retracement from the completion of this intraday ABCD pattern. So maybe 136.60 it's not very significant for daily time frame charts, confluence support. In this case, the price will remain inside of this bullish potential flag that we also have discussed in our research. So that will be normal as market just will retrace in an area of the weekly pivot support one, slightly lower than this area, and then it really could be turning point to the upside. That's also possible. That's in fact the scenario that I will be watching for. And so let's see what we will get in the nearest trading sessions.